Alright, good afternoon everybody. Should be live on YouTube. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure in its entirety. I love repeating that every day. And position disclosure, still no new swings, because I don't know why you would with this market not really giving us any conviction yet. So I titled this video something along the lines of another bearish rest day, SPX, S&P dangerously flirts with 3,900, and that's exactly what we're doing here. So let's go back to the morning, and pretty much how we were setting up today was, pretty flat open, little bit of volatility. We had retail sales, unemployment, a good amount of data come out at 8:30, a little bit of an uptick off that. That quickly got faded back down. And then coming into today, the game plan was basically, after a rest day yesterday, we talked about treating this like a bear flag pull, right? So technically we're bear flagging. Technically this is bearish. We're in a downtrend. We're below our moving averages that are sloped down. We don't have to break down 3,900 today, but the more we rest, the more we don't bounce right away and negate this candle, the more likely that's going to happen. Just the simple concept of support and resistance, right? The more times support is tested, the more likely it's to break. The more times resistance is tested, the more likely it's going to break. So the game plan today for the market was basically, we're right in the middle, so be careful doing anything in the middle. And just there's so many mixed signals out there that it's, I think, harder to make a prediction of which way we're going to break. Even though it seems like we should be breaking down that 3,900 pretty soon, possibly tomorrow. But basically the game plan today was just laying out our levels from yesterday, and it was roughly just yesterday's high and yesterday's low, right? So if SPY gets above, we basically said if SPY gets above 396, look to go long. That could get us to 398, maybe 400. And if SPY breaks 392, look to get short. That should send us down towards the 390. And then whether we break 390 or not in like a big way today, which I know we broke 390 today, but that's not what I'm talking about for breaking 390. For breaking 390, I'm talking about going to 380 that day, like obviously at least 385. But it could be even worse than that. We could have a day where we drop down to 380. So that was the plan, right? So, what happened today? We open, rip higher, pretty good open today. A lot of names. So yesterday the market really didn't do too much, but a lot of our names that we were focusing on, aka like the in-play names or so, those went and held pretty well yesterday. And today was good, but not as good. A lot of our plays worked, but a lot of them ended up rolling over. And so hopefully you guys made some money, but you probably gave a little back and got stopped. Hopefully you're at least making a little money though. Again, this market, very tricky, very choppy, very, good one day, bad the next day, then good, then bad. So money management rules come into play, which, it's a balance. Trading is a balance between, trading the right way, but you got to manage your money the right way too. So when I say that, I mean, hopefully you're not just only getting break evens, but you're being a little bit tighter with your risk and at least making a little bit of cash flow for yourselves. There's certainly been opportunities to do so. So hopefully you guys are finding some ways to make a little cash flow for yourself here and there. But anyway, so market opened, pretty good open. This is when a lot of our names triggered. A lot of them worked right away, pretty similar to yesterday. And again, upper level was 396. Usually it's not this perfect, but that was pretty perfect there. SPY gets up to 396, slightly extended on the 5-minute. You expect a pause there. We tailed off 396, broke, bull flag, failed that bull flag, failed move comes a fast move, come back down here to 392. And then we end up breaking this 392. I think a couple of you guys got some of you guys maybe got short here, maybe not. We break 392, come back up, test it, trade down off of it, and then we get to the middle of the day where things get a bit choppier here. So we reclaim 392, get to our 15-minute ADMA here, which this ends up pushing us back down under 392. So I think a couple of you guys re-shorted back down through 392 here. And, then we get this range-bound market action in the middle of the day where range-bound markets, you look really bad. You look like you're about to break down, and then you break up, and then you look pretty good. You look ready to go up, and then you fail back down. Some people like that. Some people find that annoying. It is what it is, but really range-bound markets here. And then end of the day, we sort of roll over. I mean, I know we rolled over. I know we broke 390, but we ended up closing above 390. So, that's the title of the video. We're dangerously flirting with 3,900. And I'm definitely not about to say, like, I predict this 390 is going to hold and we're going to rip off it. But I have seen times where things look really bad, but the level holds, and if the level holds, you can't really freak out quite yet. So this looks pretty bad. This looks like we should continue lower, but technically we are holding 3,900. Technically we did close above 390 on SPY. So not to worry quite yet, but we're pretty much getting there. We're definitely getting to that point. So that was the market today overall. Again, market not a little bit more in play than yesterday. Yesterday, I don't think there was really anything to do with SPY. And then because there was nothing to do with SPY yesterday, that gave us our levels to play with today. So I think a couple of you guys made a little bit on those 392 shorts. You probably made a little, got stopped, made a little, got stopped. Maybe made a little even here at the end of the day on this 392 area. Made a little, but probably, I don't know about keeping any of that because you're probably not really in the money enough for that. And again, closing above 390 here. So before I talk about what to look for next, I guess I'll just go over the plays that we were looking at for today, which, again, a lot of them, worked, but ended up rolling over and failing. But you should have been able to at least make a little bit for yourself. First and foremost, the first one we brought up, which I think was definitely the trade of the day, was Netflix. So Netflix got an upgrade this morning, and it was a really solid upgrade. Not every upgrade is the same upgrade, just because it gets upgraded. You got to really look in the details a little bit. So Netflix, I forget. Let me look at the details because I just want to kind of talk about that real quick. So you guys can know what to look, I don't want you guys to just read, this got upgraded, like, bye. You got to read a little bit into the details. The details do matter a bit. So today, Netflix was upgraded to outperform from inline. Price target raised to 300 from 245. That's what really, caught my eye there. It's one thing, and a lot of times you see it. You get a stock upgraded. Like, say Netflix gets upgraded today. Netflix is trading 230 at the open, and the upgrade is, they're upgrading to outperform or whatever, and their price target is 220 or 230 or 235. Like, that's not very much conviction, right? Like, you're upgrading it, but your price target's pretty much here. So if it doesn't go, I guess the analyst is still right because their price target's here, right? But that analyst, sticking their neck out there a little bit. Their price target was 245, which is higher than Netflix already was, and then they raised it to 300. So that's why I was saying that upgrade was pretty solid and definitely notable. And that, you could see it in the pre-market. Netflix was gapping up, I believe, around 2% or so pre-market this morning, and with the S&P flat to down a little bit. So this was our probably number one play today. I think a lot of you guys nailed this pretty well. I myself did not. So shout out to you guys, but can't catch them all, right? So Netflix, we said either buy above 330 or 230, or look if this does trade down, look for pivots at 228 and 226. Pretty early on, took out that 230. I think it danced around a little bit in the beginning. Actually, not even really. Pretty much went up through 230. First couple minutes, a little bit shaky, but then takes out its high, after the first couple minutes. And like I just said, I think a lot of you guys got this one pretty well. So shout out to you guys. Great job with this. So this Netflix, definitely the best trade for us today. This closed pretty decently too. If you're long this from under 232 today, I think it would be worth it to try to keep a little bit. But if this market does break down to 390, 3900, definitely be ready to bail on that back under 230. But I would still use 230 as a stop there. But obviously, if this market pukes out 3,900 and goes towards 3,800, this Netflix probably won't hold up too well. But solid play there today off that upgrade, and that was definitely the best one. Most of the others were okay, but ended up rolling over. So, for example, this Apache doubled their dividend and increased their stock buyback. We said to look for this for pivots, either buy it through 42 or look for pivots around 41.50. Pretty slow off the open here, but open shakes around a little bit, trades through the high of the day. I think we were calling out to try to be long versus this bar's low. So this, again, a lot of these, what I'm about to explain, somewhat worked and then rolled over, right? So if you're buying Apache anywhere in this 41.50 area through the day high or anything like that, which is reasonable to do in my opinion, you probably got paid a little and then got stopped out at the end of the day. So okay trade, but not really worth keeping. I didn't even really look at this love today. Love didn't trigger. LUV Southwest, we said to look for this over 38. That never triggered. No harm, no foul. On just reiterating their guidance, they narrowed their guidance a little bit and was saying business is still strong. HLT got an upgrade this morning. We said to look at this over 137, either 136 or 137, we said. And similar to Apache, right? Traded through the levels, worked a bit, rolled over and stopped you out for either break even or a little bit of cash flow. Jwin got an upgrade this morning. Nordstrom, we said to look at this through 1850. I think a couple of you guys caught this. I think Greg caught this. Shout out Greg. But same thing, right? Through 1850, you get paid, and then rolls over, you get stopped out for hopefully a little bit of cash flow for yourself. What else? Roblox 45. This worked and then certainly ended up failing. Roblox traded through 45 here. Again, paid you, rolled over, stopped you out. And then they came out with some not so great guidance on their analyst day today. So this will be one to watch tomorrow. If people really dive into that, what they had to say today overnight, and they decide it's pretty bad news, they could crush this back down tomorrow. Or they could decide that it's not bad news and it's really not too bad and they could buy it back up here. But this will be one to watch tomorrow after that investor day today. Just like yesterday, Starbucks was one to watch after their investor day, right? They had good things to say. Some of the big money digested the news overnight and then took it higher. So we'll see if they do kind of the same but like opposite thing to Roblox, where they had bad things to say. We'll see if that's digested overnight, and then if this ends up breaking down, what's a good breakdown level for this? Looks like 42. Is that today's low? Yeah, pretty much perfectly 42. Again, you can see 42 over here, a bit of resistance that ended up breaking up. So either 43 or 42 for a breakdown level for Roblox tomorrow, if they decide that what they had to say today was pretty bad. So, another one that kind of worked but ended up rolling over. And then a lot of just names that weren't necessarily in play but just had really nice charts with really nice levels. Plug 30, same thing, right? Goes through 30, pays you a little bit, not fantastic though, and rolls back over, stops you out for hopefully a little bit of cash flow. Rivian 40, this one was a headache for a lot of us this morning. Goes through 40, stops you out, goes back up, stops you out again. Bit of a headache there. Daily chart's not too bad. If this can hold in and this daily ADMA can catch up to around today's low, basically this 39 level, if this daily ADMA can catch up to this 39 and this doesn't get too far under 39, this will still be a play to set up in the future. But definitely a bit of a headache there. Kind of worked, not really though. What else? Charge point. Oh, this one actually, I think, did hold up okay. Yeah, CHPT, we said to watch 1825 for confirmation. And, same thing right off the open, right through 18. Actually, looks like you had to buy pre-market to get 18, but that confirmation, 1825, that was somewhat doable. Nice rip, nice hold there too. Actually, so this and Netflix were probably the two best ones today. And this chart is looking pretty good, but this 20 stopped at that 20, which we brought up intraday. This 20, definitely a level in this thing. Definitely a level. Once this can clear 20, all you really have is this 21, and then you start to get a bit looser up to like 24 or so. So that chart's still looking good. That's actually not a bad play from today as well. Another one that unfortunately I did not catch, but I think a few of you guys did. And I think that's it. I think that was most of them. So some okay ideas. Some of them worked pretty well. Netflix and ChargePoint worked okay. And then the others, if you were good with risk management and tight with your stops, hopefully you got paid a little bit and then got stopped out. But no harm, no foul. I mean, look at where this S&P is. Look at where this market is. I wouldn't be too worried about, you shouldn't, even though those names stopped you out today, I don't think you should have FOMO that you got stopped out or anything like that. I mean, this market's looking pretty dangerous here. So, don't worry that you got stopped out. I don't really have any FOMO about missing anything for now anyway. So what to look for going forward. So tomorrow, we got one more economic number for the week, University of Michigan sentiment at, I believe, 10 a.m. Eastern time. The market has moved off that recently. So we'll see how the market moves. But basically, 390, right? 390. And if you want to be really particular with it, 388.50 is a bit better confirmation. It's roughly a little bit below today's low. And then that other pivot from this day that we basically did the same thing on this September 6th day as we did today, where we broke 39 or 390 but came back and closed above it. This low is 388.42. Today's low 388.90, 388.89 or so. What is it? Oh, 388.78. I don't know why that's giving me a weird. Oh, I'm looking at the close. That's why 388.78. So yeah, 390, 388.50 if you want a little bit better confirmation for a number. Below 388.50, definitely look out below. That should get us to 385 in a pretty quick and ugly fashion. If not, honestly, 380. So we'll see how we gap. I was saying it today. If we gap down, there is a real chance that we have a gap and go to the downside day. If we gap down, that doesn't mean that has to happen. But if we do gap down, they better buy us back up right away. Like, if we gap down, it's not going to be one of those days where, we could bottom one way or the other. Like, they could buy us right back up. They could base us out half the day and then turn us up, something like that. I don't think it's like that, because gapping down below here, I mean, you're losing this support. Anyone that is, kind of praying that this 390 holds is definitely going to be out of the money. So it's not impossible for them to gap us down and then have us trade right back up. But if that happens, they better do it pretty much right away in the first 30 minutes or hour or so of the day. Otherwise, there is a very real chance, in my opinion, that a gap down towards this 388.50 could give us a gap and go to the downside day. We've had pretty much today was a bearish day, but again, we still held support. So pretty much 2 bearish rest days, giving this ADMA more room. After tomorrow, this daily ADMA should be caught down to today's high. So it should be caught down to this like 395 level or so. Very dangerous, very dangerous. If they gap us up, no worries. We'll just be still stuck in the middle where you can't really do anything until SPY clears this 396. Clearly a level from yesterday, and now today is helping confirm that level as well. I guess 394, a bit of a level too if you want to cheat. But so if they gap us up, no worries. We're just going to be kind of trapped in the middle again and won't really be able to do much until we clear either 394 or 396. And if they gap us down, be ready for what could be a bad day. And again, I'm not saying it has to be a bad day. There's no guarantees in this market, other than the only guarantee in this market is that you're going to go back to equilibrium at some point, short of, I don't know, the end of the world. But if they do gap us down, they better buy us back up right away, or else, again, a real chance of a gap and go to the downside day. Gapping below support, putting all these people out of the money. The only, I guess, the asterisk, so to speak, that you would put on that is tomorrow, Friday, is quad witching, or I guess triple witching, because quad witching doesn't exist anymore, right? Like single stock futures, they don't exist, or do they? They're just not really traded anymore. Not sure. It's a triple witching, quad witching, the witching day, whatever. Tomorrow, monthly OPEX, and it's a big one. I want to say it's, what is it, like 1.6 trillion, something like that. It's a huge number for this OPEX that's supposed to be rolled off. So we'll see how they handle that. There is a chance that there's a lot of puts and I think Bill was talking about this earlier. There's a good amount of puts. Oh, true. Yeah, good point for Bill, too. So SPY goes ex-div tonight. So if you guys don't know how dividends work, which you probably should, the stock goes down by the amount of the dividend that's paid out. So I forget what the SPY div that is. I think it's like $1.30 and change, something like that. So SPY should gap down by the amount of dividend that it pays out. So that's a good point, Bill, actually. If we do gap down at all, it might, we got to really assess how much it is, because part of that, the dividend's going to affect it. But I look at the futures. We'll look at the futures. That's where I really get my levels from. That's what I really look at, in the mornings and everything, to gauge the market. So we'll see. But that's a good point, Bill, on the ex-div. But so, although we are looking dangerous, it wouldn't surprise me if they give us one more rest day at this 390 area, just for the sake of not letting those trying to make a lot of these puts expire worthless, so to say. That's kind of the main objective, the main game, for lack of a better word, behind quad witching, right? Market makers want the most amount of options possible to expire worthless. The statistic, I think, is like 70-80% of options expire worthless. That's how the big boys make their money. So there's a chance that the bad day isn't tomorrow and we got to wait till next week after OPEX, after all that clears up, for this market to loosen up a little bit. So again, I mean, we're looking pretty dangerous, but I think the futures level is like 38.90, 38.85. That's what you really want to watch in the futures, 38.90 or so. So we'll see how they gap us, either, below that, right at that, above that. And then we'll see what kind of games they want to play for the quad witching day, for options expiration, monthly options expiration. And yeah, I think that's all I really got to talk about. So, just to summarize again, looking pretty bad, but still holding support by a thread at this point. Options expiration tomorrow, so we'll see if they kind of hold us up for that. I'm definitely not, predicting or trading off of a prediction that they're going to hold us up, and I'm not short going into tomorrow predicting that we're going to crash and burn and puke out that 3,900 tomorrow, but just, be aware of the possibilities. Trying to think if I forgot anything else. No, I don't think so. So yeah, I think that's all I really got to talk about. So happy to answer any questions that you guys have or anything like that. I know there's a couple posted already. Let me just bring up YouTube as well. And let me just read through the VTF. Scroll back up to when I started the meeting. Pat, can you go over your Rivian trade and where you put your stop if it wasn't at day lows? Where do you guys see the upgrades? Andrew, I post them every morning in the VTF. So if you guys are logging in, late, and by late I mean like after 8:30 or whatever, that's totally fine. But make sure you scroll up. We start posting news in here. Usually I start by like 7 in the morning. Definitely by 7:30 at the latest, but I usually try to start by 7 in the morning, and I usually try to get it all in there by like 7:45 or so. But when you log in to the VTF in the morning, just scroll up and you'll see everything from macro news to stock-specific news to the economic calendar, upgrades and downgrades. Pretty much anything and everything you could possibly need to start your day is posted in the VTF. I try to do a good job with doing that. So yeah, just when you log in the morning, Andrew, just make sure to scroll up and you'll see it was all there. The Netflix upgrade was there, the JWin upgrade was there, everything was there this morning. So Paul, can you talk about your Rivian trade and where I put my stop if it wasn't at day lows? Sure. So hopefully Derek's not listening to this meeting. Because I didn't necessarily trade Rivian the quote-unquote correct way, but to me it was the correct way because I traded it with a momentum type of style. So these big levels that are pretty clear, for example, Rivian 40, when you get breakouts and when you get momentum, I always like to say, by the nature of the trade, this should happen. And if that doesn't happen, it may work, it may not work, but this is what's supposed to happen. When you clear big levels, aka like breakout trades and, again, trading through big levels, the best trades only give you one shot to get stock. That doesn't mean that if it gives you more than one shot, it can't work. But in general, to keep things simple for the most part, the best trades only really give you one chance to buy stock. So a momentum trade, a breakout trade through a big level, if it's going to be good, it should go through that level and not look back and not give you multiple chances to get stock. For example, Netflix 230, ChargePoint 18. What else do we have today? What else? Now I gotta look at my list real quick. JWin 1850, which I know some of these rolled over, and I guess theoretically you got a chance to rebuy them again, but not after, that was after the initial move where you got paid on buying through that level. So sometimes I'll be a bit cheap and have a not kind of it is kind of like a random stop, but it's not random because again, by the nature of the trade, it should go like these types of trades, momentum breakouts through levels, it should go through the level and go and not look back. You know what I mean? Like momentum trades don't go through levels and then just like magically gap down to day lows, or they don't go through levels and then do what Rivian did, shot back and forth and shot back and forth and trade through 40 friggin' 20 times before it kind of finally goes. Even though we were saying, oh man, like I know this is starting to go now, but this is starting to go, like this isn't going when everything else is going, when Charge Point, all these names are going and this isn't going. So because of that, by the nature of what those types of trades, how they're supposed to act, you can be, in my opinion, and again, I think just Derek says like, you want to trade things the right way, because Derek's pretty good with working with new traders, and he doesn't want to give you information that you think like, oh, like, Pat saying give it 50 cents, so I'm going to give every trade 50 cents, because it depends what type of name you're trading. Like giving, I don't know, something like Rivian 50 cents, and that's not exactly what I did, is different than giving SPY 50 cents, is different than giving ChargePoint 50 cents. I mean, they're different names, they trade differently, they have different daily ranges. You can have SPY, which is a $300 name, stay in a dollar range, and you can have ChargePoint, which is a $19 name, move points and points, and then you can have ExxonMobil, which is a $90 name, stay in under a dollar range. Like, you got to know how the name trades, to gauge, like, I'm just saying, like, average daily range, for lack of a better word. That's not really, it's just kind of like observing all these names and trading all these different names. Just over time, you just start to learn how these names move and how they trade and what they're supposed to do, and, understanding that a charge point could rip with momentum, whereas a JP Morgan probably isn't going to rip with momentum through a level. It's probably going to be a bit more grindy. So a Rivian today for 40 looks like I was giving it, I'm just trying to look at my chart and look at my orders a bit. I think I was just giving this like 20, 25 cents or so. Let me look at my executions. I think I was giving it a bit. So, yeah, I was giving it like 25 cents. And again, Derek would probably crucify me if he was listening to what I'm telling you guys right now. But I'm just keeping it real with you guys. So again, by the nature of what a breakout momentum trade is supposed to do, if it's going to be a good trade, and there's no way to know. I mean, if I knew that Rivian wasn't going to work, but ChargePoint was going to work, like, I would pour all my money into ChargePoint and not look at Rivian. But like, you never know, right? All you know is the setup and the level, and whatever happens, happens. So a Rivian, 25-ish cents. I mean, it's usually increments of either, and it depends on the name, right? Like sometimes it's 10 cents, 25 cents, 50 cents, a dollar. So like a Rivian, a little bit cheaper, $40 name, you could probably use either 25 or 50 cent increments for momentum. Whereas like a Tesla, I'll use like $1 for momentum. And that doesn't mean every time I trade Tesla, I give it $1 out. Like, that's if I'm buying it through a level and I'm looking for momentum, right? That's different than buying Tesla based off a daily level and trying to work in on a swing, and maybe I'm being a bit looser with it. It depends on the type of trade, which is what I always tell you guys, right? You got to know what type of trade you're taking. So, and the reason I do this is because, one, by the, what's supposed to happen on this type of trade, and this type of trade is a momentum trade through a level, as opposed to me, averaging in on a swing or something like that, buying lower, hoping for lower to buy more at even better prices. This is a momentum type trade. I know what type of trade I'm doing when I'm getting into this trade. So, I'm thinking 25 cents is a decent increment. If this goes through 40, this shouldn't go through 40 and then drop, technically, what's the right out? Day lows, yes. But if it's going through 40, what should happen if it's going to be a good trade is it should go through 40 and be at 40.50 pretty fast. It shouldn't go through 40, go back under 40, above 40, back under 40, above 40. And that doesn't mean the trade can't work. But what it should do, if it's going to be a good trade, is go through 40 and not look back. So I'll do these tighter increments because, one, I can take more size, right? I can take more size on 25 cents risk than I can on 60 cents worth of risk. That's just simple math. So I can take more size, and it's also tighter risk. So I can do a mix of taking more size as well as keeping my my stop. I just lost my train of thought for a second. Oh, so I can take more size, and because it's tighter risk, I can lose less money if it doesn't work and still have the ability to retry it a second or a third or maybe even a fourth time. So again, this, if it's going to be good, and so that's pretty much what I did. I'm telling you right now, I gave it like 20 cents risk. If it's going to be good, it should go through 40 and not look back. So it goes through 40, comes back down, I stop out, whatever. If it goes through day lows, other people are getting stopped out and they're losing more than me and I'm not. It comes down through 40, it goes back up through 40, I can try it again. Fails, and I don't think I even tried it I think I tried it 2 or 3 times. And then I was not in it for this and was a little bit annoyed, but we were saying this isn't acting right, all these other names are exploding higher. This isn't, this should be exploding higher. And although it did make its move and was a little bit annoying here, it pretty much failed and came right back down. So that's pretty much what I did with Rivian. Let me just reread your question real quick because I just went on a little rant. And then so what I'll also do, and I'm just like being perfectly honest with you guys. So what I'll also do is I will do these smaller increments on momentum to take more size, and I don't take a 1-for-1 because I know that my out isn't right. And therefore I shouldn't really be taking a one, it's risk reward maximization. So I'm taking 20 cents risk, but I'm probably not selling until 40, 50, 60 cents higher because that's good. That's like true risking 1 to make 2 or 3. When you take you should take your 1-for-1s for sure. For sure. Especially if you don't have conviction in the trade. If you don't have a ton of conviction, you should definitely take your 1-for-1s. But just think about the math. And please, for the love of God, please don't let me talk you out of taking 1-for-1s. It's very important, especially if you're learning trading. But just think about the math. If you're risking $100 on a trade and you're up $100, so you're at your 1-for-1 risk reward, and you take half off, so like say you're risking 20 cents, you're up 20 cents, you're up $100, you take half off, and then you go up another 20 cents, and you're at your 2-for-1 risk reward ratio, but you're only up 150 because you took half off at that 1-for-1. So you're at your 2-for-1 risk reward ratio standpoint, but you're only up 1.5 on your risk because you took half off. So it can be a little bit reward limiting. So what I'll do is, because I am being cheap and not using quote unquote the right out, but again, I'm being a little bit cheaper because of the style of trade that I'm taking, which in this case is a momentum trade. I can, it just, the math works out where I can take this through 40, get stopped out, take it through 40, get stopped out, try it a third time, take it through 40. And because I'm not taking a 1-for-1, but I'm going for like 1-for-2, 1-for-3 reward, the math is going to work out where I can have this fail, get stopped out, fail, get stopped out. And the third or fourth time that I try it and it actually works, I'll still make money because I'm actually going for that one, like my 1-for-1, even though it's not really, but like where I take half off is at my 1-for-3, like risk reward ratio or something like that. So that helps eliminate like the churning problem that you'll sometimes get where you're taking your 1-for-1 and you take your 1-for-1 fail, take your 1-for-1 fail, take your 1-for-1 fail, and then it finally works, but you're just like capping your risk a little bit, so you're taking your one, you're not really making as much as you should by the time it actually works. So just like that, it's just like math, it just works out where if I'm, risking 20 cents and I'm taking half off 50 to 60 cents higher, I can have this fail 2 to 3 times and still get paid, okay. And maybe by the fourth time, it's starting to not pay you too well, but it's gonna still pay me. Versus if you're taking the true 1-to-1 every single time, you're probably not getting paid too much by the time you're up 1-to-3 on your risk reward ratio on try number 3 or 4 because you're taking that off. So, right, like if you're risking $100 and you're truly not selling any until you're up 300, you can lose 100 and lose 100, lose 100, and then that third or fourth time you're up 300 plus or so, you're making money. Whereas if you're doing your 1-for-1, you're might be break even or even down a little still. So yeah, I think I just answered your question. I hope that helps. I'm just being completely 100% transparent and honest with what I do and what I was doing and how I trade. And, there's some way to, there's no right or wrong way to trade. It's just whatever works for you. So me, that's just how, that's just like how I've been able to trade momentum. It's harder when you're new, I think, because you want to take that profit right away. It takes like practice really not selling too early and really going for that reward. Like you're putting the risk on and really going for that reward. And I always say that with everything, like with holding winners, like it's harder when you're new because you see that profit and you want to take that profit. But the first couple times when you really do it and it really works, like you start to be like, wow, like you can actually, like that's how you make the bigger money, is holding the winners for longer, not selling too early. That's like how you make the bigger money. So yeah, that's my little rant, Paul, on Rivian. I hope that helps, and I hope I'm not messing up your guys' trading rules or anything like that. I'm just being perfectly honest. Scrolling down. I don't know if Josh is here or not, Ramon, but basically Netflix, the buy was either 230 or through the day high after like 1 or 2 minutes or so, which is why I like to watch the 1 and the 2 minute off the open, especially when you're pretty much opening at these levels. Because if you're waiting 5 minutes and then you're buying Netflix 234 through the high, I guess it kind of worked here, but That's just chasing too much for me. I'd rather buy it through the 1 or 2 minute high and buy. If you're waiting for the 5 minute high, you're buying 234. But if you're seeing this above 230 and the volume's good and it's looking good, get in earlier, get in cheaper. So you're buying 232 if you're buying through the initial actual 2 minute high. You're buying 232 versus 230 and getting paid on that. FTX pre-announcing lower, huh? Ooh, wow. Oh my. Wow. That is brutal. Wow. Wow, wow, wow. Wow. That's all I gotta say about that is wow. 180, a pretty big level. 170-ish, pretty big level. 160, a pretty big level, but wow. Wow. Yep, Andrew posted in the morning. Scroll up and you'll find them. That's so crazy for FTX. We had Rivian, PDD, Plug, Netflix, ChargePoint on our radar today, and you went over the levels in these names in the morning meeting. Do you think having a small position pre-market would help? No. Not really. No. If it's going through the level pre-market, that's one thing. But if you're talking about just taking a feeler to take a feeler, I mean, I don't know. That can really mess you up mentally, in my opinion. If the name, doesn't you take the feeler and the level never triggers, where's your out on that feeler? That feeler could lose you more money than you intended, and you're going to be pretty psychologically angry at yourself when you're losing more money on a feeler in a trade that never actually triggered. So no, but if it's going through the level pre-market, that's different. You just got to know how to trade pre-market, which is basically you have to use limit orders. Market orders don't work, so you can't use stops. You got to limit everything. You got to be pretty fast with your limits and everything like that. So I don't think just randomly starting pre-market is good, but if it's going through the levels pre-market, you can nibble a feeler at the level for sure. Wow, yeah, Amazon getting hit on that as well. Interesting. And yeah, UPS too. That is quite a move on this FedEx. That is quite a move. Quite a move. You can save this question for the end. Alright, I'll come back to it. See, I got Robert on YouTube. Don't be scared of talking about the 2 minute time frame. Shout out to you, Robert. Hope you're doing well. Sebastian, hey Pat, with trading options intraday, do you know how to define dollar risk like in stocks? Personally, I don't love trading options intraday. I just have found, and that's what I used to, before I traded at T3, I pretty much only traded options, which is what most people do. I just find that because it's a more illiquid market, just over time, it just doesn't really usually work out, because the biggest reason would be if a stock goes flat all day, you can just hold the equity, but you're burning time premium on those intradays, especially if you're playing weeklies or something like that. So you're asking like how to define dollar risk like in stocks. Personally, the way I don't really trade options too much anymore, um, but I think the right way to trade options, in my opinion, is to go for multi-day moves and risk either 50% or 100% to try to make doubles or more. And like you take one for ones in equities, you get an option that goes over 100%, you can take half off and then you have a free lottery ticket. I just haven't seen I've seen a lot of failures and not a lot of success with people trying to get intraday options. Sometimes you win, sometimes you lose, month over month, year over year. It's hard. It's really hard to trade options intraday. You can't be as tight with the stops, and you can't. It's much harder to get in and get out and get in and get out as it is with equities. So you can try it for sure, but personally, for options, I kind of think you should be risking either 50% or 100%, and you should be going for doubles or more. And usually, you need to do that over multi-day time frames. So, I'll see people like make 25% on their options intraday, and that's just like not that impressive to me. What's impressive to me is when people hold Tesla options for a couple days and they make 400, 500%, right? Like that's how the math is going to work out. Like the math isn't going to work out long term if you're making 25% and losing 25% and making 25% and losing 33%. Like the math isn't going to work out. But if you're risking 100% to go for more than 100%, that math should work out as long as you're right roughly half the time. So, again, I'm not saying there's like a right or wrong way to trade options, but just that's kind of how I think you should go about it. And to add one more thing, just be very careful with weeklies. Weeklies, like Citadel loves when Robinhood people trade weeklies. Like they love it. It's usually better to go out and pay up for time if you're trading options. So, like, unless you're pretty sure something's gonna explode tomorrow, sure, go for like a Friday lotto play, which would still be the same thing. You still should be risking 100% to make more than 100%. But otherwise, it's usually better to pay up for time. And if you think something's going to move this week, buy next week's options. And that way, even if the play doesn't work out, you'll probably still have some premium left to sell, versus if you buy weeklies and it doesn't work out, you lose everything. And you're definitely not going to make money in the long run if you're making 50% gains and your losses are 100%. So I hope that helps a little bit, Sebastian. Just reading through the comments. 390 pretty big. Yep, XDiv. Yeah, definitely appreciate you sharing those charts with us, Bill. It's definitely good information. So we appreciate it and we thank you. Syed Andrews asking, aside from following the game plan and reviewing your trades, what is the best way to assess you are trading well as a beginner? Would you recommend a daily percent of principal or weekly, monthly return on investment target to keep myself in check? No. It's a good question. Let me think. So you should always be taking your trades based on daily pictures and daily levels, unless it's like an intraday scalp where you're doing, just like extension trade or something like that. And even still, that still usually has some daily into it. So I think, you're saying what's the best way to assess your trading well as a beginner? Go back to your trades, review your trades, and look at the bigger daily picture. And, just ask yourself, like, was this really a good trade, or was this kind of random? Was I taking a trade at a daily level? Did my 5 minute and my 15 and my daily charts all line up with the trade? If the answer is yes, then good job. And if the answer is no, and it seems a bit random, those random trades are what's gonna kind of make or break you in the long run. Because again, half this battle is making money, and the other half is not losing money. And it's usually kind of those like random losses that you can just avoid by avoiding random trades, basically. That's going to make a difference in your month. I mean, it's helpful to make money, but it's very helpful to not lose money as well, right? So just make sure, again, just review your trades, compare your 5 minute charts with your 15 minute charts, with your daily charts, and just ask yourself, like, did everything line up? And if it did, then, keep at it. And if everything didn't really line up and it seems pretty random to you, then, maybe try to not do that. And if you're not sure, then ask here. Say, hey, Pat, I traded XYZ today. I bought it at blah, blah, blah at this time. What do you think? And I'll either say, good idea, good job, or I'll say, this seems kind of random. Like, why are you doing that? So I hope that makes sense, Andrew. But like, that's like the biggest thing for me. I always talk about it and harp on it, is making sure all your time frames line up. Yeah. I hope that helps. And I agree with Noah Schultz's comment here. P&L doesn't matter, especially for us as prop traders, because you can basically scale up infinitely for the most part, unless you're like you get to Warren Buffett's level or something. But for the most part, you can scale up. So it's not about P&L as much as it's about your risk reward. Like, I don't care if you're only risking $1 as long as you're making $2 to $3 on that. I don't care if you're only risking $10 as long as you're making $15, $20, $30, $50 on that. That's the name of the game, is risk reward. And once you can get that down, and then ideally with good risk reward, you don't have to be right. You can be right half the time or less, but ideally also, you get better at technicals, and you get better at reading sentiment and understanding market sentiment with technicals. And ideally, you can be right more than half the time. I mean, you don't have to be right 100% of the time. No one's ever going to be right 100% of the time. But if you can start to be right 6 out of 10, 7 out of 10 times, and your risk reward's pretty good, then it's just all about it. You're just doing the same thing and scaling up. So again, I don't care if you're risking $10 as long as you're making $20, $30. Because if you're doing that, you can risk 100, make 200. You can risk 1,000, make 2,000. You can risk 10,000, make 20,000. You can risk 100,000 and make 200,000. I mean, the sky's the limit with this. But you got to have that risk reward in check. So yeah, totally agree with Noah's comments there. Yeah, Nick, for sure. You just got to have that 200K to risk. And then holding winner, and then obviously with like trailing, with Derek's trailing and everything like that, that's how you do get those 10 to 1 plus risk reward trades. You're probably not going into it saying I'm going to risk 1 and make 10, but you're risking 1, selling some at, either 1 to 1, 2 to 1, 3 to 1, and then you're trailing a little bit, and that's how you get those trades where you risk $100 and you make over $1,000 in them. I mean, it's possible. It's very possible. It's probably not going to happen that same day. It's probably going to be a trade that turns into a swing, and then you just hold 100 shares or 200 shares or whatever over the course of a couple days or a couple weeks or so. But it's very possible to get 10 to 1 or even better risk reward ratios. And big part of that's definitely trailing and trailing properly. Yeah, that FTX move is crazy. Probably not going to help the market, that's for sure. Yep, yeah, exactly, Noah. Yep. Mike's comment about giving yourself at least 4 weeks. Yeah, it's always better to buy more time. Um, Retail doesn't do that because retail would rather, why would I buy? Why would I spend $300 on a contract 3 weeks out when I could spend $100 on one that expires in a couple days? And then you'll learn that you probably, you'll lose more than you win on those types of games. And even if you do get that 1,000% winner, usually you just end up blowing that trying to do that another 5 times or so. Reading through the comments. What's my view on selling options? I think selling options is great. You just got to know what you're doing. Um, I would never, I don't think I would ever sell naked calls. You're just you're just playing with fire doing that. Like you're just playing with absolute fire doing that. At least short the stock, or at least sell a call spread. But naked call selling, it could be career ending. I mean, naked call selling is literally like the opposite of good risk reward. You're risking infinite damage to make a little bit. So at least limit your downside and sell a call spread. But selling options, if you know what you're doing, can be really good. It depends what you're doing. I mean, you could be long stock and selling calls against it. You could not own a stock but want to own it and sell puts. And if the stock goes down and you get triggered, you buy the stock at a pretty good price. That's like the Warren Buffett method, right? Selling puts on stocks that you want to own. And if the stock doesn't go down, you collect that premium. And you can get real fancy. I want to do more and more of this. I just want to grow my account a bit more before I really start doing it. But that's like what us as active traders, especially if you have a bigger account, really should be doing. If you're swinging names and you're swinging equity, you probably shouldn't just be swinging equity. You should probably be selling options around it as well. It just generates cash flow, it generates yield for yourself. You can sell spreads, you can sell naked puts, you can sell calls on equity that you own, you can sell puts on equity that you want to buy. So yeah, I mean, I think selling so I guess your question, what's my view on selling options? I like it. You really got to know what you're doing. If you don't know the Greeks in options and you don't know what they mean or what they do, you probably shouldn't be selling options. Learn about options first. You really gotta know about them. You gotta learn the Greeks. You gotta learn implied volatility, yada yada. But once you can really learn about it, it can be very rewarding for sure. Yeah, like if you don't know what Mike just said about the spot 70 delta, if you don't know what that means, go Google it. That's what people would always tell whenever I like got started, and I would ask like higher ups, not necessarily in T3, but like friends I work in like banking or like sell side trading, and I'd be like, oh, like what does delta mean? They just say Google it, Google it. If you want to learn something, Google it. Google it. Google what the option Greeks are and what they mean. It's good to learn. Ricky, I'm trying to get better at extension trades. I look at 5-1 for best execution only since those are very fast trades. Would you consider it random or good shorting Roblox at 317 when it tailed off the 1 minutes 8 EMA? Personally, I look at the 2, 5, and 15. The 1's a little bit too small for me, but let's see what you're talking about. Would you consider random or good shorting Roblox at 317 when it tailed off the 1 minute? So this right here, well, that's not really an extension trade because an extension trade is buying Roblox down here. That's a continuation trade. That's Roblox coming down, bouncing back up, and then you're expecting it to continue back down. So first of all, that's a continuation trade, not an extension trade. Yeah, I don't love that. I don't really love that. I know it worked, but like that's 15, 17. So that's this bar within this bar. I don't really love that. Especially that time of the day. I mean, I only had my 1 minute up in the first like 15 minutes or so, maybe 30 minutes, and then I switch it to a 2 minute. I don't really love that. Your multiple time frames aren't lining up. You're shorting on a 1 minute, which looks good, but there's more room for this to bounce on the 5 minute. There's, I'm sure, more room for that to bounce on the 15 minute. Even on the 2 minute, there's more room for that there. So don't take it the wrong way, Ricky, but I don't love that. But again, that's not exactly what you just said. That is not an extension trade. That's a continuation trade. An extension trade is buying Roblox down here, not shorting it after it bounces back to the downward sloped moving average. That's a continuation trade. So I hope that helps a little bit, honestly. If you did that, hopefully it worked for you. Hopefully you made a little bit of money. I'm glad it worked. But that's not an extension trade. That's a continuation trade. An extension trade would be like buying Roblox down here, looking for a move. Your first target's your 2 minute ADMA, your second target's your 5 minute ADMA, your third target's your 15 minute ADMA. That's buying Roblox like down here. And usually on those extension trades, again too, like I did the QS short today. I don't know if like anyone did that with me. I probably wasn't vocal enough about saying I'm doing it. I was definitely saying QS 1250 upper 12s should be a cute short. You are usually buying, like if you're buying an extension trade looking for a bounce, you are usually buying it on a really ugly candle. Like you're not, if you're buying Roblox extension, you're not waiting for a good candle to come in and then buying through it. You are buying a bad, ugly candle knowing that extension always corrects itself and you're anticipating a bounce. And just think about how hammers are formed. Like this green candle in Roblox, at one point when this candle was forming, this was a red candle. So this candle opened here, closed here, tailed down to here, and tailed up to here. At one point, when this candle was forming, this was a red candle with a red body going down here. So you don't want to, buy that candle per se, but you're buying, the way I do extension trades is you're buying extension and you're giving yourself plenty of room for that extension to become worse, and you're just trying to make like some cute cash flow for yourself. But think about, buying through this high is like reacting and not anticipating. Buying extension when it's ugly is anticipating that a bounce is going to happen. And again, just think about how candles are formed. And I always talk about this with charts. Like, money doesn't move because of what a chart looks like. A chart looks the way it does because of how the money is moved. So again, like this, this is just like a random example here, but this green candle in Roblox, at one point when this candle was forming, this was a red body that opened here, and when it was tailing down here, this was a red body candle, but it was very extended at the time. And if you're buying this extension and you're thinking 42 might hold, but at worst case you might get a flush to mid 41s, and then all of a sudden this is bouncing, you're selling it in this bounce when other people are seeing the bounce and react, they didn't anticipate, but they're reacting to the bounce, and you're selling it to the people that are buying that, reacting to that candle. So I hope that helps a little bit. But I want to make sure you understand that too, Ricky, that short you described to me, that is not an extension trade, that is a continuation trade. An extension trade is buying it down here, looking for a move back to equilibrium. And a continuation trade, that's what bull flags and bear flags are, is, you bounce back, moving averages are sloped down, and you continue on the trend down. So I just want to make sure that you understand that is a continuation trade, that is not an extension trade. Is there a process to be allowed to sell options with T3? It depends what you want to do. They are not going to let you sell naked calls. If you want to sell naked puts, you need to have a decent account, and we do need to have a bit of a conversation with compliance, but we can work something out. But for spreads, you should be allowed to sell spreads because the risk is defined there. So yeah, there's a process, Zach, and you can definitely do it. Besides selling naked calls, they're not going to let you sell naked calls. Yeah, so there's a little bit of a process, and you might need a little bit of special permission. But yeah, just ask, and we'll work that out for you. Looks like I got through all the questions. I know Paul had one more question. I guess I can scroll up. What would like to know your trading journey? How long have you been trading? How long did it take you to get consistent? Any struggles or things that helped you get consistent? It's 5:30 already, so I'll keep it a little quick. But yeah, I guess I'll just give you my trading journey. So I've been trading with T3 for over 4 years now, a little bit over 4 years, which is not that long. I mean, I am not I'm not an expert. I consider myself a good learner and a fast learner, but I'm definitely not an expert. Derek is much more of an expert. He's he's an OG. He's been around, and even Derek trading for whatever now, 12 years plus or so, he's arguably still a little bit of a beginner. I mean, there's people I know that have been trading for 30 years that still can't really quite figure it out. But so I've been with T3 for like 4 years or so. Before that, I was trading options in whatever, like my Robinhood or E-Trade or whatever. Pretty much just burning money trading options. Not to say I was losing every time. I definitely had some winners, but month over month, year over year, it's pretty hard to be consistent. So how long did it take me to get consistent? Any struggles or things that helped to get consistent? Sure, that's actually pretty easy. So people always, whenever I talk to people on the phone about coming to trade with us or anything, That's a pretty common question. And my answer is roughly a year and a half or so. So if anyone's listening and they've been trading for a few months or so, don't get too discouraged, because it definitely takes time. And the reason it takes time is because you need to see, and it doesn't really count if you were if you were a retail trader but like really full-time trading, then that's okay. But it's different when you're really doing it full time and you're really like watching markets and watching the tape all day every day, and you're seeing how the market reacts to news during certain market environments. And the same headline in one market environment might react totally differently to that exact same headline in another market environment. And so the reason I say over a year is because you really need to be able to see all the different types of markets, whether, and those types are basically a bull market, a bear market, and a sideways market. So and it just like takes time for those different markets to develop. So everyone, like the old saying, everyone's a genius in a bull market, right? I mean, you can buy pretty much anything, and if it doesn't work right away, you can just hold it and eventually it'll work and you'll get paid. I mean, everyone's a genius in a bull market, right? But those geniuses, a lot of them aren't so smart when, you know, things hit the fan, for lack of a better word, and markets turn down. And then there's, people get too stuck shorting and they don't really know how to read price action. And if SPY, for example, doesn't break down 390, we end up squeezing off of 390, and they just fight the short the whole way up off 390 when they shouldn't be doing that because 390 never broke down. They're going to wipe themselves out too. So again, just to keep it short and simple, but it took me it definitely took me over a year, maybe like a year and a half, maybe even 2 years or so, definitely over a year. And that's because I had to see it. Just, you got to see every type of market. You got to see a bull market, you got to see a bear market, you got to see a choppy, sideways, difficult market, which is what we're in now, which is why we've been saying, guys, once this is all said and done, if you can make it through this and really learn price action, you should be setting yourself up pretty well. But you got to see, these like tough, choppy markets. You got to see grindy bull markets. And you got to see fast bear markets. We're in a bear market, but right now it's pretty choppy. As opposed to like the first real down move that I think I saw with T3 was the December 2018 move when Powell ended up pivoting and we had the Christmas Eve bottom, the Santa bottom. That was coming off a summer of, this was like the FANG bull market. I mean, you could wake up and buy Amazon every day and go take a nap and go to the beach and come back and make money like literally every day this summer. It was the easiest thing ever. And then that ended in September. Fed started hiking rates. They hiked pretty aggressively, pretty fast, and that turned into a pretty short-lived bear market where we pretty much just got down to 20%. And then we had pretty much the first V-bottom ever in history for the market as well. So this up move was pretty challenging too, because everyone's saying, oh, we've never had a V-bottom, there's no way we're just going to go back to highs, and that's what we ended up doing. And then we had the V-bottom at this V-bottom seemed so crazy at the time, and then you look at COVID and it's like, wow. But yeah, it's just time and just seeing the different types of markets and making mistakes and learning lessons through those different types of markets. Whether, again, it's, a grindy bull market, a choppy, sloppy, sideways, bearish market, or just a fast bear market where things are just like totally crumbling. It just takes time. As much as you can study charts and think you're gonna know what to do, when you're actually trading and you're actually in the trenches and like really trading and really watching the tape, is different. So yeah, it just takes time to see all the different types of markets. So yeah, that's my answer for you. And yeah, don't fight the Fed. True that. This guy, it's so funny how there's guys that have been out there like trading for like 30 plus years and they like don't get the Fed is like the market god, which they really have come to be. I guess things were different before 2008. It wasn't always like that. But yeah, the Fed is really, really important, right? But we know that. We know that already. So yeah, hope that answers that a little bit, Paul. And I think I got through all the questions. So we'll see how they gap us tomorrow. SPY is pretty weak after hours here, probably on that FedEx news. So yeah, we'll see how they gap us. If we open up around here or lower, again, we're looking at we're looking dangerous if we open around here or lower tomorrow. If we open around here or lower, they better buy us back up right away. Otherwise, we are definitely in for a possible gap and go to the downside. So we'll see how they gap us, and we'll take it from there. So have a good night, everybody. Hope my rants, helped a little bit and are not messing up your trading rules. I seriously mean that. Derek would probably be mad at me if I talked about all that, but I'm just keeping it real. So have a good night, and we'll see you guys tomorrow.